Well, a spike in inventories has been a major headwind for retailers. Abercrombie and Fitch, for one, said inventories rose by 45% last quarter. Brian Sozzi had the chance to catch up with the company's CEO, and that's where we find Mr. Sozzi's take today.
The first investor day for Abercrombie and Fitch in some 4 years. Had a chance to catch up with CEO Fran Horowitz. Asked her about the broader economic outlook, but also their inventories levels. As you mentioned, Julie, inventories were up close to 45% coming out of that first quarter. Here's what she had to tell us.
93% of our inventory is current. And we broke that down today. We took a little pivot from a future-looking day where we were talking about our long-term goals, and we took a minute to talk about inventory for that very reason. We wanted to make sure everybody understood that 93% of our inventory is current. That means goods that actually haven't even been set yet that we brought in early because of last year. We couldn't get the goods in because of all of the challenges that were happening out there. Long life goods like jeans and underwear and fragrance, as well as current goods for spring and summer.
And inventory levels right now, and this is my take, it's one of the most important metrics right now if you are assessing on whether you should buy a beat-up retail stock or perhaps maybe lighten the load on retail stocks that you may own for whatever reason here. Inventory levels across the board, across retail, continue to be very high. We're showing some of those names on there with outsized increases coming out of the first quarter, but it was interesting to hear Abercrombie & Fitch and Fran dissect what type of inventory, what is it made up of. I think a lot of that increase reflects price increases on goods, but as she mentioned, a lot of current stuff that is not even in stores yet.
Yeah, and that really kind of brings us into their 2025 targets as well, that they have $4.1 billion to $4.3 billion in revenue on kind of this 8% operating margin. And so where in the connection of the inventories and reaching those goals, where might we be looking for price increases? How did they say that they're set to hit some of those targets?
Well, I think for back to school, and it's not just Abercrombie and Fitch, you will see, you're going to see higher prices through the board. It's just a matter of how long can these apparel retailers hold on to that higher pricing in an environment where we have Target being very aggressive on prices, Kohl's being aggressive on prices. So it could be a challenging back to school season.
Yeah. So what's the other metric again?
Gross profit margins.
Gross profit
yes, because of course that metric includes rent, occupancy, and all other metrics. But if that starts to come under pressure because of inflationary forces at the same time as you're sitting on too many goods, it's not a good look.
Yeah, during any type of recession or downturn, people want the full jean, not the ripped jean.
Not the ripped jean.